Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Scaling up portfolios. Most investors think that scaling up applies only to their equity portfolios, because equity is more often the asset class that brings superior returns. Investors are only interested in scaling up their equity portfolios. But that would mean that an investor is taking a very narrow view of his overall asset allocation. He is also restricting his portfolio to one asset class, and he is not looking at what other asset classes can do for his wealth creation. Let me give a simple example. Assume that equity valuations are like the present, extremely stretched and vulnerable. You also want to invest some more money every month because you are having money that you are saving. You are not comfortable investing in equity at the present levels. What I see most people doing is they are not interested in anything else other than equity. So, either they try to find something that is relatively attractive in equity, or they don't want to invest at all. But in order to scale up your portfolios significantly and in line with your investment potential, it is important that you continuously do something that will improve the scale of your portfolios. So, if you have monthly savings, you must find some other place to invest if equity is not all that attractive. And you must not force yourself to invest in equity simply because it is the most attractive asset class in terms of returns. So, if you look at the present context, you could have invested in gold in the recent months. Now you can invest in debt. So, what effectively would happen is you have an existing equity portfolio which is trading at excellent valuations with a great history of returns. You have extra savings which you put into debt. You also have a gold portfolio which has done extremely well in the recent weeks. So, if you keep on adding your incremental savings into debt until either gold or equity or some other asset class is more attractive to you, you would have saved and invested to your potential. That's very, very critical, because if you save money every month without fail and invest it in a safe place, which may not necessarily be the place that gives you the highest return, you would still have completed the saving part to your full potential. Now to the return generation part. Many people think that, oh, I put it in debt, it's not going to give me great return. Why did I have to do this? You had to do this because in the future, whenever other asset class become more attractive in your eyes, you are able to move money from this debt into that asset class. So, you are actually keeping a lot of dry powder which you will use to fire when you see the opportunity. So, it is important to keep scaling up other asset classes when you are not able to scale up equity. It is very important not to idle the money or to spend it or to fritter it away. So, you should seek scale in your portfolio by investing in other asset classes when your primary asset class, which is equity, becomes less attractive. And you must invest in those asset classes diligently so that you don't lose capital and you get stable returns. And you can always shift out of the asset class back into equity whenever you find equity attractive. This is the construct which an investor needs today, not avoiding other asset classes if you are not able to invest in equity. That won't work. So, you need to find asset classes where you can invest when equity trades at stretched valuations like in the present. Thank you for watching this video.